Good evening. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for the evening of Monday, the 9th of October, 2023, 6:10 p.m. Central Time. Wow, what a weekend. How do you like coming back into all this? It is something else out of left field. The situation I will talk about in Israel, let's do that in the financial market arena, okay? I'll do it there instead of having to repeat everything over and over. It's pretty horrific, and we'll go through it. Chuck Schumer did meet with President Xi of China. It's hard to believe. He claims, I saw the news conference, he told Xi about intellectual property. He couldn't even get Xi to acknowledge that Jews were being killed in Israel. He made that point to him. I give him credit, okay? I'm generally pretty anti what he does, but he's got guts. He got the meeting. Another group of senators were there, and they got to say what they want. Speaking of metals, in the copper market, one of the largest companies there, especially during COVID when they were bringing in all the copper, guess what? He's disappeared. And guess what? It's called an investigation. These guys, if you're the head of a company there and you disappear, the gulag is the wrong term because that's obviously Russia, but I think you permanently disappear. And that is the way to do business there. I think you got to be crazy to do business in these countries. If your company becomes successful, thank God, Alibaba's founder, Jack Ma, he was so big, at least they didn't make him disappear, but he went into hiding. Do you remember that? You've got to be careful because their way of cleansing things in their term is you're gone. And we're not talking like in America, you're gone, you're out of the company. I mean, you're gone. And it's not the prettiest thing, and how long you're gone and what rights you have, if any. These are all not the best things that you can have. But what we did is, remember, today was the indigenous holiday, the old Columbus Day holiday. Some people like to call it that still. And we had cash markets and bonds and notes. They were not open. They will open, and they're probably open right now, actually. I think they opened about 10 minutes ago. It's 10 after 6. Energy markets had a rally because people don't know what to make out of what's going on with the Israeli war. It's no longer a conflict. It is a declared war. And in that war, just what is going to happen? How are the countries around the globe going to react? History shows, contrary to what you might think, that energy prices don't rally on this and don't stay up on it. They go back to the fundamentals. I know the thoughts are, everybody's going to shut off oil. Who's going to shut off oil? We're not at war with the Saudis. Israel's not at war with the Saudis. We can't even prove that Iran had a hand. I think everybody in America believes they had a big hand in it. And I think that all the dots connect them to it in some ways. But you got to get bigger dots in order to connect them. That's what the world wants to see. So, the handy people were Hamas and the factions. And I'll talk, like I said, about that in the next update. Suffice to say, coming in, how could you not expect gold to rally, the energy markets to rally, notes and bonds to give up yield, the dollar at first to get a bid. It got up as high as 106.34, and then it gave up literally the whole thing. So now we're back into where are we? This is how fast the world changes. Where are we on the Fed? Because come November 1st, we have the FOMC meeting. And now all the little Fed people, I call them little, I'm being humorous, they are important. They are coming out, and each one is giving their opinion as to what the Fed should do. And so far as I'm hearing our new Vice Chair Jefferson, and I'm hearing Langer and some of the other names that are coming out, they are more moderate. A number of them are, I think, starting to say what I have been saying here. The marketplace is doing the Fed's job for it. It's acted as more than just a hike. It has taken up the 5, the 10-year, the 2-year. They've all rallied to sharply higher levels, doing a certain amount of restraint. Now, the newest part that's coming out, and you have to get used to it, is they're going to say you can have full employment and falling inflation. Get ready. That will be the new things that come out. And, everything here goes in waves of thinking processes. All right. When we come to the gold market, what I can still see is the market is trading underneath the 18-week moving average of closes. The bias is down. When we look at the bar chart, you had this big gap in the chart and the market's up. Gaps normally get filled. Do they have to? They don't have to, but they normally do. I mean, a big amount of the time. Number two, we had a market that had a pattern of lower highs, and with this rally high right here, I left that on so you could see it in the gap away. Now you've got a lower low, higher high. You have broken the downtrend on the daily bar chart. Remember, over the weekend, I was doing the weekend chart, so I wanted to leave some of these things on so I could show it to you. All that I'm looking for, if it can continue to rally, is wherever the 18-day average is, the line in the sand. Markets rarely get beyond that before fighting a battle. You were down here, you went to it. When you were over this number, you came back and fought at it. Over the number, you came back and fought at it. That's the most I'm looking for on this rally. When we take a look at Bollinger Bands, you finally did move. Remember, we had these 6 days in a row under it, and I said that is so rare, but it's a very bearish situation. Well, I don't think this could have happened today without the situation that happened in Israel, and that spooked the market. But we'll see if it has a lasting effect on gold. More important to me is this, and you and I step back just a moment here. Look at how the market finished today, Monday. This is the close Monday. You still had an embedded reading. You are now early on losing the embedded reading. If it stays lost, I feel much more certain that the market's going to try to make its run up to that 18-day average. The gold-silver ratio, still trading over that key number. On the way back down, that would be the zone that I'd fight. But to get there, that means silver is going to get stronger than gold if it decides to travel to that number. And as you can see in the silver, and we'll come here, the silver market today lost the embedded reading. Today. Now we're into Tuesday's trade right now. I won't be surprised at all to get to the 18-day average and run into resistance there. In the copper market, you didn't have an embedded reading. You got oversold. I made a statement to you over the weekend. I said it will not be a surprise at all to get a bounce into the copper market because as the Chinese come back from their Golden Week holiday, the new buyers come in, the cash markets get going, and they go, oh, we've used up a week's supply, let's load up and blah, blah, blah. And you're getting that rally into that resistance. Then in the platinum, now this is the OC Platinum. I'm going to move you to the January. This is my fault. I should have moved it. But I'm not looking for much more than the rally here. Are you going to lose the embedded reading? If you do, and you haven't done it as of tonight, all right, which was October 9th, you got to be over 21. But if you do, look for it to quickly get to the 18-day average to try to figure out what to do there. And in the dollar index, look for the support at the 18-day average. But are we at that point in the dollar index where the market starts saying to itself, you know something, if the Fed's talking all these pauses, should we continue up? I did a piece today for Bloomberg on the question was asked of me, do I think the euro is going to go to parity with the dollar? And to make a long story short, I said, I doubt it. I said, I think that in order to get there, you got to drop another 5 percentage points. That's an awful lot to drop from here. And that means you got to take this market down to the 100 level. Why would it do it? Especially if the U.S. is going to pause. Now, if the U.S. is going to go up in rates again, and I'm talking the Fed rate, or if the real rates take off, then I want to rethink my position. But a lot of the worst is behind us right now, and we might be going into a sideways motion for a little bit. Even Bill Ackman, great call on his part, looking for 5% on some of the instruments, and for all purposes, they got there. I know other people were talking 6%, but what I warned you is this. When markets make a move, the Johnny-come-latelys all go, it's not just going there, it's going here. When it falls, that's not just where it's going to zero. Well, you don't want to get into that habit. You want to realize when you see that, back away from it. Why is it going to do that? It wouldn't be the best thing for the economy. Reality has to set in at some point, and that's what we have to ask ourselves. The higher for longer story most certainly is here. But how much here? Because as we look at CPI numbers, should they begin a race to the downside, that's a different world. I'm not saying they will or won't. I want to see some more data, and we're going to get that data. I think this week we're going to get some more CPI numbers. Now, I want to remind you, you see me talk all this. Do you know how to keep up with it? Do you understand the technical indicators? Years ago, and I mean many years ago, I worked with our good friends at Futures Magazine back then. And I think today they became TradingView. So the evolution's unbelievable. And we put this together. Now, other people were writing it, but I was working with their old editor, and we would go with it. And I was one of the biggest promoters of Futures Magazine way back when. And I would take this on television, and people had never seen anything like it, and away you go. Well, these articles, I swear to you, are better than the new ones being written. I read the new ones. I really pay attention. Everything's covered here in beautiful detail. You print it out, colors, graphs, everything you need to know, from money management to Elliott wave, Gann analysis, the ideas as to how it works, stochastics, RSI is in here, moving averages, what type, how do you want to use them? There are so many different types. Moving averages, you can use exponential, you can use simple moving averages, weighted moving averages. There's many things you can do. So at least learn the terminology so that you know if somebody's talking, you have your syllabus, you go to it. That's what that gentleman's doing, because most of you don't realize that. How do you get it? It's really simple. You go to our website, iraepstein.com, free offers on the top left, or move your cursor up to the top here. That's it. We mail this to you by email. You just open it up, print it out, put it on your desktop, whatever you want to do. I'm Ira. You have a good day. I'll see you in the next video.